a touch. The gold standard, so to speak.
All right, folks, when all the major indices begin to break out, people start to grab their buy list, their watch list, and they start to go to work. And right now it does feel like the train is starting to leave the station. So I want to find out what Nicholas Wealth Management, David Nicholas, is doing. You know, David, before we get to any sort of individual ideas, your impression of this market, go back to last week, we fall off a cliff on comments from a non-voting member, at least this round at the FOMC, that we knew was a hawk to begin with. And then we have a couple of sideways sessions in the last 2 days, and now we're off to the races.
You know, Charles, no question. I mean, I'm impressed with this market, but, we've been here a few times. This 42.71 was the high on the S&P. We've tried to break this now 3 times. We haven't been successful. So I think, short term, that could be looked as bearish, right? We just don't have the momentum to push through. We obviously have sellers at these levels. So I love the action I'm seeing, but we got to break through this in order to get us to the next level.
I tend to agree with you. I think when you hit a resistance point for too long, it normally leads to some sort of a pullback. What do you think is stopping it? It feels, we've been in this market where it's value versus growth. It's stay at home versus going to work. It's always one or the other, and it never feels like all the oars are going in the same direction at the same time. Today, you've got some noticeable laggards like Apple. The home builders are falling apart. What is it going to take to get everything that's sort of tide lifting all ships at the same time?
Well, generally, I always say, Charles, we need some type of catalyst. What's the next catalyst that's going to push the market higher? And I can't think of it. I mean, you've got infrastructure later this year, but really, obviously, we're going to the summertime. It's a low volatility, low volume time, typically for the market. I just think we need something. We need a catalyst. We're too focused on interest rates. We're too focused on where's the 10-year Treasury. Inflation's a big part of it. So I think we somewhat have a malaise over the market of where are rates going, where's inflation going, without this big push for this next leg higher. So I think until we see that, right. I don't know. I think we could be in a sideways channel over the summer.
All right. So more or less too many dark clouds out there. If we do close above 42.71 and we start to gain momentum, what would be off to the races maybe?
Oh, I think no question. I mean, if we can break that, that's a psychological support. If we can stay above that, I think we'd have a strong second half of the year. We need some help by the 10-year, though. I don't want to discount that. One of the biggest risks is the 10-year jumps, well close to 2. That could put a damper or a lid on the markets. But if we break that level, Charles, I feel really good about it.
Today's show has been sort of an ode to individual investors who jumped in this market back last year in March. They've held on. They've been buying dips. What do you say to them? I know people come to you all the time for your expertise, and some individual investors probably always want to share their expertise with you as well. But what do you tell them?
Charles, I'll tell you, no question, this has been the year of the retail investor. And, I listened to your interview earlier with Portno, and I'll tell you, what has the market done in the last year? It's up over 100%. Everyone is a genius when the market goes straight up, okay? And so what I tell my clients, what I tell friends that are investors is like, look, doing well in the market isn't about 1 year, because Charles, me and you are both bullish on the market, but we may not see a year like we saw last year. It may not be in our lifetimes that we see another year like that. And so everyone is a genius. Even someone like Portno, who's never owned a stock prior to last year, is a genius when the market is going straight up. But where were you in 2008? Where were you in 99 when people were losing fortunes because the market was just overvalued and we saw large excesses unwind rapidly? So I tell you, patience pays off. So I tell the retail investor, buy the names that you want to own, but don't have FOMO. Don't have this fear of missing out where you overpay for names and you get caught in a situation where you can take some big hits. So, Charles, investors like you are successful because it wasn't just 1 year you were successful. You've been successful for decades, and that's what investors, retail investors, need to remember as well.
I personally also, Dave, like to tell people I'm a student, right? I always want to be a student in the market. I don't ever think I've got it licked. I got some things that have worked for me that I learned the hard way over a long period of time. I think the most important thing is that folks make this a lifelong endeavor, which is, by the way, different than always being 100% vested. I will say, though, that these retail investors, they held strong on a few dips when everybody else was kind of diving out the way. Let's get to what you like, because you have an amazing track record. It feels like that growth value thing shifting back to growth. What do you like here, David?
Charles, I love a good value, right? So I don't want to overpay, but I'm looking at a name like Palantir. If you can pick up Palantir on a dip, so from anywhere from $23 to $24 a share, I'm a buyer of Palantir. Above 30, I'm very bullish on the stock. But I'll tell you, we're looking at the private equity space more and more. A group like Blackstone BX, I think right now they've made some really good inroads into insurance companies. They're growing their asset base. If interest rates improve, that'll help net interest margins. So I like some of the private equity space, and BX is our choice in private equity.
Any more?
I like Digital Turbine is a name. Yeah, APP is a name that we really like currently. And I also think you got to look at some of the names. I'm not done on home builders. If you look at some of the forward earnings of what some of these names are still trading at, there's still some good value, even in a name like DHI. So I think well-rounded, you want to own both tech, both value. I think it's going to get you really whatever this market throws at us, you're going to be able to handle.